everybody. Welcome to the Trading with Ashley show. This video is going to be perfect for those of you that have been very curious about what selling options is all about, but you did not know where to start. I wanted to start from the very beginning and help you if you've never done this before. So for this video, and if you want to follow along with the play, you will need an account funded with about $1,500 for your first sold put. Now, the ticker symbol that we are going to be working with is Sofi. It is a wonderful company that is smaller priced. This is perfect for beginners. And when I have students that come into my community, I like for them to get started with this particular stock because it has a lot of potential promise in the future. It's great for selling puts, and if you're put the shares for later selling calls, that's called the wheel strategy. So I'm going to help you with this, and I'm going to take you through everything you need to know to get started. And the reason I am so passionate about this is I now have been able to retire selling options. I am able to generate income that me and my family live off of. I take the income that I generate and I can go to the grocery store and buy groceries. I can pay our house note, our light bills, all of those things. And I am able to do this because I learned this valuable life skill. It is a hack for making money. Now, it's not without risk. Nothing is without risk. But I think you'll see after you learn the steps to doing this that the biggest thing you need is a quality company and patience for these trades to work out in your favor. Before I sold options for a living, I worked in corporate America for almost 30 years. I wished I would have learned this valuable skill much sooner because it would have given me some incredible memories with my family that, quite frankly, I missed out on. But I am making up for lost time. I now have grandchildren and I am fully present for them, and we are making wonderful family memories because I have totally changed my life by retiring young and selling options. I want this for you too. The first thing I need to do is to go ahead and get started by opening up a brokerage account and funding it. I'm working with Robinhood, and so what you need to do is go to the Transfer Money tab, and then you want to transfer enough funds to actually take the play that I'm going to show you. So to do that, you would need about $1,500 to get started on your first sold put with the trade I am going to share with you. You also need to apply for the ability to sell options. There's a series of questions that they'll take you through, and once you're approved and you are funded, you'll be ready to take the trade I'm about to share with you. The next thing you want to do is to go to a site like Yahoo Finance, and let's look at some key things on the stock that we're going to work with. This is Sofi Technologies, and one of the first things I like to do is go to the Analysis tab to make sure this is a healthy company before I decide to actually invest in it. And here's how I tell. I look right here at the revenue versus earnings. And if you see blue bars that are continuing to rise, this means that their revenue is continuing to rise. But more importantly, their earnings are rising with their revenue. This is the yellow bar. And so if you see this continuing to increase, and this is a healthy company that is doing great things with the money that they're bringing in, they're finding more ways to become profitable. And on Wall Street, profitability is everything. The other thing you may want to consider is the current price target. With an average price target of around $14, right now investing in the stock might be considered a good idea because there is upside. Next, we're going to go look at the technicals on this stock that we have selected, Sofi Technologies. Now for this, I like to look at the 3-month band. We are going to be selling an actual option that is 1 month out, and when I do that, I like to look at the 3-month action. You want to first check the RSI to see where we are. If you see this right around 50, this is in a healthy situation because the stock at this point is in a bullish mode. Anything over 50 on the relative strength index means that there are more buyers than there are sellers. Now, it's okay to take a trade if this is under 50, but just know if you take a trade under 50, we are having more pressure on the stock, and you'll actually get more premium that way if there are more sellers than buyers. But depending on where this is will dictate whether or not I take a little bit more aggressive trade or a less aggressive trade. The fact that we're over 50, that gives me more confidence in this trade, so I might go a little bit closer to the money. And that means I'll sell a put option that is closer to the current pricing, because if I'm assigned, there's a good chance we'll start heading up again. Now, looking at this chart, you can see this grayed out area here. This is the Bollinger Band. This looks at potential price action on a stock. And at this point, the bottom of that band is right there around 1220. It's also the 200-day moving average. The 200-day moving average is a very important level that I consider, because if a stock is healthy, more than likely it respects the 200-day moving average and it looks at it as a level of support, meaning if it comes down to it, it will bounce in the coming days. It's not guaranteed, but on a healthy company, you usually see it behave that way. So knowing that, I'm really comfortable looking at an entry maybe at around the $12 mark or even the $12.50 mark. If you already have this stock and you're looking at the other side of the equation, and that is selling covered calls, you'd want to consider going to the top of the band or slightly above it. But for this example, selling a put, we're focused on the bottom of the band or close to the bottom of the band for a potential entry. So the next thing I am going to do is I am going to go back into Robinhood. I'm going to queue up this stock and I'm going to look at what the premium might be if I sell a $12.50 put going out 1 month. Once you get into Robinhood, you pull up your ticker symbol. In this case, it's Sofi, S-O-F-I, and then you go to Trade Sofi Options. For the date of filming, we are at the end of May, just so you can orient yourself, but you can adjust this as needed based on the date that you're making the trade. So once you get to the trade options, we are going to click these buttons, Sell, Put, because that is what we are looking to do. We are selling a put to generate income. Now, when it comes to your expiration date, I want it to go a month out. So right here, you change this expiration and you want to look at something that is about 20 to 30 days out for the month. I really like June the 20th because June the 20th is the third Friday of the next month, and that's when you'll see the bulk of liquidity on the chain. Because when it was primarily institutions trading options, they would go with the third Friday of the month. So that continues to be one of the most popular times to trade options on the monthly chain. Once I click that, it's going to populate the chain. And so I want to go and look for that strike price I had mentioned to you. $12.50 is the one that I was comfortable with. And the way a Robinhood does this, they look at chance of profit. This is what they illustrate. And this is good. You want to look for something that is around 70%. Now, if you're looking at deltas, you can expand this and you can actually look at the delta. One way to look at the delta is to consider that it is the likelihood that the stock would settle in at this price or lower on expiration date. So if it has a 0.35 delta, what you're looking at is about 35%. It's a little bit different with the way that Robinhood does it, because if you look at it now, clearly it said that it was closer to 69%. But just so you know what the delta is, and don't get too hung up with this right now because you're at the beginning, but what this is showing you is at this point in time, every dollar that Sofi moves, then the option that we are currently selling, it moves as well. And it will move by 35 cents for every dollar that Sofi moves up and down. So knowing that just gives you an idea of if you start to have the trade work against you, then something you sell for 54 cents right now, if it gets $1 closer to our $12.50 strike from the point of executing the trade, then this will start to increase, meaning you could have received more if you had waited a little while. Now, if Sofi starts going up away from our strike price right here of $12.50, then you will see this start to go down in value at this point by 35 cents for every dollar, meaning you would be able to buy it back and exit the trade in profit, because if you're paid 54 cents and then it's reduced by 35 cents, that means you could buy it back for a less expensive transaction. But for the point of our first trade, what we're going to do is look at this $12.50 and we are going to click right here the premium. So what this is showing you is you're going to get 53 cents, not for the entire trade, but 53 cents per share. When you sell options, you are looking at 100 shares of a stock. That's why we wanted to make sure we had that $1,500 in our account so that we could support this trade. So when I click this on right here, it's going to populate it for me. And when you press continue, you get a more clear picture of what's happening. So this shows you right here the credit that we'll receive is $52.96, and that accounts for the difference between what's the bid and the ask. You can adjust this as needed, but if you want to fill right away for your first trade, then you would just leave it to whatever they populated at. Now going down here, I want to share with you what this means. It shows that the max loss is $1,197. Well, if you're like me and you're seeing this for the first time, you're like, well, $53 is nice, but I certainly don't want to risk over $1,000 just to gain this $53 in just a month's time. But what this is showing you is if you were put these shares and SoFi went to zero, then you would lose your entire investment. But because we are dealing with a company that is making a profit, it's a solid company, the chance of it going to zero is very low, especially in this short time frame. So I just want you to fully understand what this means. I don't want it to scare you unnecessarily out of actually taking a trade. So once we're satisfied with the trade, we are deciding right here to do one. So we just want to keep one in here. We review the order, and then we go ahead and press submit. And then it'll fill. It filled right now. And so now we have this particular option in play. It's very exciting. You've sold your first put option. It shows right here that we have $53.96 that was put in our account. The option buyer is the one that put up this money for us. And now we go on to monitoring the trade. So let's go to the trade since it's been filled, and I'm going to share with you what will happen if we get to our expiration date, if it actually gets to our strike price or if it does not get to our strike price. Now that the trade is executed, I've gone ahead and I pulled it up so that you know what to look for to see how you are profiting at this trade or if you need to exit the trade. So if you see right here, it says 620. I received the average credit of 54 cents a share. And right now, this same contract is selling for 54 cents. But as the stock moves up and down, you're going to see this price change right here. But all that really matters is what is SoFi trading at on our expiration date. Our expiration date is 6/20. So if we get to 6/20 and SoFi is trading above $12.50, then this $54 that we received, this contract will whittle down to zero. That means that it expires worthless, and we keep 100% of the $54. And then all the cash being held for the trade is released to us, and then we're on to taking new trades. But what if on our expiration date, SoFi is trading at $12.50 or below? If that's the case, then we will be put the shares, meaning that they will take the $1,250 that is being held, and they will actually purchase the stock for us. And then when you wake up Saturday morning after 6/20 expiration, you'll have 100 shares of SoFi. Now, if SoFi is only trading at $12 a share, you still committed to buying them at $12.50 a share. So that's what will be in your account, and that will be your cost basis. But all you have to do is wait if that's the case. Wait until SoFi gets back up to this price, $12.50, and then you are ahead of the game because remember, you did receive this 54 cents a share. And then once you're up to $12.50, now we can switch our whole thought process to selling covered calls on our stock and gaining premium that way. Also, there's the opportunity to gain the price appreciation. But I'm going to save all that for another video because this one was all about selling puts. And then once it starts to rise, I'll come back and I'll do a second part to this video on selling calls against shares that you own. Okay, and now that we've sold our first put option, how do you feel? Is it liberating? Most of my students will share with me after they sell their first option, they almost think it's a scam. They almost think it can't be real. How can I have generated money by doing this? And so I hope you're inspired. I hope you now take this to the next level. Don't put too much money in at any one time. And for larger ticker symbols, consider paper trading because now that you know the keystrokes, you can watch the movement of these large larger stocks and you can look at the possibilities. I'm glad to be here for you along the way. Remember, if you're with me trading with Ashley, there is no trader left behind. I wanted to share with you that me and my very dear friend, Stocks with Josh, we are collaborating together and we are going to do a workshop, a 2-hour workshop. It's going to be on Saturday, May the 31st at 6 p.m. Eastern. I'm going to leave the link below if you're interested in signing up for it. But the workshop is going to be great because it's a combination of both of our skill sets put into one workshop. I have invented a term called the skip call option. I've actually trademarked it. And this workshop is going to be all about the technical analysis when you're wanting to purchase a skip call option. And then I am going to teach you the entries, the exits, and how to protect yourself and how to make money with this valuable strategy called the skip call option. If you're interested in just better understanding some technical analysis secrets that Josh is going to share, and better understanding how I leverage trade hacks like this to make money, then you don't want to miss this workshop. Sign up below.